What's up guys, Brent the Broker here today, and today we're going to be talking about homeowners insurance and home warranties. What's the difference and when do you need which and what does it cover? Before we jump into the video guys, consider subscribing to the channel, turn bells on for notification, drop us a like if you like what we're doing. We really appreciate your support, and make sure to stay tuned to the end of the video for the pro tip of the day. Homeowners insurance and home warranties. A home warranty, what does it cover allegedly? A home warranty covers you in the event that mechanical systems break down. Appliances, it'll cover some roof leaks, some electrical, maybe some plumbing issues, some things of this nature. The problem that I have with home warranties is that there's a ton of fine print and it's very hard to get them to cover your home and to actually come out and do the home warranties. But theoretically, if your dishwasher breaks, you would call the home warranty company, you'd pay a $50 or $100 in that ballpark deductible, and they would send a repair tech out and the repair would be covered. Now, in my experience, it's not that easy and a lot of stuff isn't covered. I don't recommend them. I don't do extended warranty on my car. I don't get extended warranties on the electronics I buy, and I don't get warranties on my home. Your mileage may vary, but that's my experience. In fact, from what I understand, it's only a small percentage. For every dollar that you pay for a warranty, only a small percentage it gets paid out in actual claims. Every dollar that you spend goes to commissions, overhead, profit, sales, things of that nature. That's why every company wants to sell you a warranty for every little thing, because they don't pay out much. You know, it's just a profit-making machine. Compare that with homeowners insurance. In homeowners insurance is exactly what it sounds like insurance for your car, right? You get an accident, your car's totaled, it's a total loss or it needs repairs. The insurance company, after a deductible, a healthier deductible, usually in the range of, $1,000 to, several thousand, will come in and cover the cost of the repairs. One of the houses that I bought, about 6 or 9 months after moving in, we had a water main leak and it wrecked the floors, it wrecked the cabinets in the kitchen, the drywall, the bathroom on the other side, and we paid I believe a $2,500 deductible, and there was $20,000 worth of repairs that was completed on the insurance companies. An insurance policy is there to cover you in the event of catastrophic losses such as floods, fires, if you get robbed, if your home is burglarized, they usually have some personal property protections in there. Also, if you get sued because someone is injured on your property, someone's running around their backyard, breaks their ankle and sues you for the medical costs, the insurance policy might cover that. Make sure you check with your insurance broker to make sure that you understand what is covered in your policy and what's not. I am not an insurance agent. These are just some examples of things that we've seen covered in policies in the past. Warranty covers stuff that breaks down or doesn't cover stuff that breaks down. And a homeowner's insurance policy covers you in the event of catastrophic losses. Also, if you are getting a loan, if you have a lender that's funding some of this deal, they typically require that you have homeowners insurance as part of the deal, because what they don't want to happen is if they loan you, $500,000 or $600,000 or $800,000 using the property as collateral and it burns down and you can't afford to build it back up, well, now they have $500,000, $600,000, $800,000 loan against a piece of dirt rather than something with a house on it. So they require insurance to make sure that their collateral is protected. Even if you don't have a loan, it makes sense to get homeowners insurance. It's not that expensive. Usually $100 a month will cover it in most cases, and it'll cover you in the event of fires, floods, and things of this nature. So the pro tip of the day is this. Make sure you are reading your insurance policy, understand what your deductible is, understand what your coverages are, make sure that there's enough coverage to build the home back up in the event there is a fire. If you do an addition to your house, make sure you go get more insurance, because the insurance typically covers the rebuild cost of the house. And so if your policy covers, $250,000 in rebuild and 10 years later it's going to cost $350,000 to rebuild the same home, you want to make sure to increase your policy. Pro tip number 2 is there's some stuff it doesn't cover, like earthquake insurance. In California, where we're at, earthquakes are a very real threat, and just make sure, the pro tip is that you make sure that you understand what is covered in any of these policies, be it a home warranty or homeowners insurance, so you make decisions that work best for you, that fit for your lifestyle, and that cover you in the event of a loss, because there would be just a horrible situation if your house burnt down and the insurance company said, we're giving you $200,000 to build it back up, and the contractor tells you it's gonna cost $4 million. So that'll be it for me today, guys. Thanks for tuning in and hanging out with us. We really appreciate your support, and we'll see you next time.